Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Betting clearinghouse Polymarket is everywhere with predictions on local elections and even the fate of the KissCam CEO. The platform that lets users wager on what might happen is one step closer to re-entering the U.S. market. Founder Shane Copland joins us.
What's the difference between you and Kalshi?
Polymarket is Polymarket, and they're a Polymarket copycat.
How Mr. Beast built an empire, the #1 subscribed channel on YouTube, branded chocolate, and a $5 billion valuation, CEO Jeff Housenbold on working with the Beast himself.
We just clicked, and we had a shared vision of how to create the next generation of Disney, a diversified media and entertainment empire.
Plus, Beast Games champion Jeffrey Allen.
You won this whole thing, 1,000 contestants.
Crazy.
$10 million.
$10 million.
And the rest of today's stories that got us squawking. Eamon Javers has the latest on a trade deal with Japan.
Does this sound like a bespoke deal, or is this something you think we're going to start to see across the board?
I mean, it's right in range with the other deals.
The soaring cost of powering the biggest grid in the U.S. and big tech's talent wars.
You don't hear about talent getting poached from other places. Is that because they're really good to their employees, or is that because nobody wants their employees?
It's Wednesday, July 23rd. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is out today.
Let's get straight to it. President Trump striking a big trade deal with Japan, and Eamon Javers joins us right now with more and all of the latest. Good morning.
Yeah, good morning to you, Andrew. We don't have a lot of details here from the White House, but we do have a statement that we got overnight from Japanese Prime Minister Ishiba talking about this deal. He says if necessary, he's going to speak with President Trump or meet with him in person, but he's going to review the details of the deal. He said this is going to lead to both countries being able to cooperate and create jobs, produce great products, and fulfill various roles in the international community. And here's the statement that the president put out on Truth Social yesterday, offering what we know of the details of this trade deal so far. The president saying, we just completed a massive deal with Japan, perhaps the largest deal ever made. Japan will invest, at my direction, $550 billion into the United States, which will receive 90% of the profits. Put a pin on that for a second. This deal will create hundreds of thousands of jobs. There's never been anything like it. Perhaps most importantly, Japan will open their country to trade, including cars and trucks, rice and certain other agricultural products and other things. Japan will pay reciprocal tariffs to the United States of 15%. This is a very exciting time for the U.S. of A, and especially for the fact that we will continue to always have a great relationship with the country of Japan. That from the President of the United States. So the question here, Andrew, is, what are those profits from the deal, and how are those 90% profits going to go to the United States? Is the President suggesting some kind of fund or some other mechanism whereby the U.S. can profit from trade directly? So we'll wait for the White House to provide a little bit more detail. But this comes on the back of a day where we also had trade deals with the Philippines, a trade deal with Indonesia, or at least framework of a deal with Indonesia, and all points to a world where tariffs are higher than they had been certainly in January, significantly higher, but less than the president had threatened. That 15% for Japan, Andrew, is lower than the 25% that he threatened that country with just a short time before. So the president's negotiating style pretty clear here. What he wants is higher tariffs, and that's what he's getting, guys. Back over to you.
I want to go back to the 550, and I want to go back to the cars, because we could probably look at some car makers.
In just a second.
We're going to do that in just okay. We're going to hold off on just looking at some of the stocks for a second. But in terms of the 550 piece, what's the possibility that that is effectively the collection from 15%?
Yeah, that's interesting. That is the way the president thinks. That could be what he's talking about there. We're going to have to get more clarity from the president in terms of, and from the White House in terms of what he's talking about there, or if that's some other sidecar deal regarding investment, buying products, that sort of thing. That has often been done in these trade deals in the past, where you announce some large agricultural purchases over time, something like that. So we'll wait and see what the White House has to say this morning.
To the extent that you can forecast / speculate about the future, Does this model, or is this a model for other countries? If you were to look at the kind of deal that India could strike or others could strike, does this sound like a bespoke deal, or is this something you think we're going to start to see across the board?
I mean, it's right in range with the other deals, right? I mean, it seems like each of these is individually negotiated with the countries in question, but you're looking at, 19, 15, somewhere in there in terms of a percent tariff. That's what the president's focused on. And then opening up access to U.S. goods to that market. We'll see what opportunities now exist for U.S. exporters in some of these markets. What can U.S. manufacturers sell to Japan, Indonesia, and the Philippines that they couldn't do, earlier this week? That's an open question, I think, for manufacturers to see what the size of that opportunity really is when you look at what those markets traditionally need and buy and what the U.S. traditionally, makes and sells. But I think, it is a template in the sense that, you're ending up with tariffs in the teens and some sort of lowering of tariffs on the U.S. And opportunity for ag and other purchases.
Okay. Eamon, we will be back to you, I'm sure, as we sort through what is a complicated transaction. Thank you.
And Andrew, to your point about what it means in the markets, we showed you where U.S. equities are this morning. They are up across the board, with the Dow up by about 235 points. But stocks were up even more in Japan on this news. In fact, the Nikkei was up by 3.5%. Japanese car makers also soaring on this. You got to look through one by one because this is a really big deal for all of them. Toyota up by 14%. Honda was up by 11%. Nissan up by 8.25%. And then Mazda up by more than 17.5%. And then, just in anticipation of what might come next, you had Germany's top car makers also rising in the morning trade. Across the board, you see Porsche up by 7.3%, Volkswagen up by 6.5%, BMW and Mercedes each up by more than 5%. All of this happening on the expectation that maybe a deal can be cut for the EU that includes some of these automakers, too. That was the big news. The auto tariffs coming down pretty significantly. Yesterday, President Trump teased a possible trade deal with the EU coming just in the next few days, and the markets are getting ahead of that based on the success with this deal with Japan.
We're getting some new developments in the war for top AI engineers. The information now reporting that Meta has hired 3 researchers from Google's DeepMind initiative, bringing the total that Mark Zuckerberg's company has poached to at least 6 people. A Google spokesperson saying the company continues to attract, quote, the world's leading AI talent, including researchers and engineers who come from rival labs. Meanwhile, a person familiar with all this recruiting telling CNBC that Microsoft has hired about 24 employees from DeepMind in recent months. The move coming as AI talent poaching has ramped up, with OpenAI's Sam Altman saying that Meta has now offered employees $100 million in terms of signing bonuses to jump ship, and we've heard of numbers that are even higher than that.
Yeah, $300 million over several years. I think what's so interesting about this is when you get to, what's the peak for this? Are we at peak? Is it going to get longer from here? How long does it take to get more talent kind of fed into this AI pipeline on these things?
The question is, how many of the are, when you talk to some of the leaders of these companies, they're like, there's 200 of these people.
Right.
And that's it. And the question is, why is that? And what is the magic here? I don't know.
How long does it take to ramp this up? And then the other thing I always think is, you don't hear about talent getting poached from other places. Is that because they're really good to their employees, or is that because nobody wants their employees? Nobody's coming.
Poached from, you mean?
There's a few companies I can think of where you haven't really heard big poaching stories that have come through. That are companies, I would say, like an Amazon. You haven't heard big stories of that. Is that because Amazon's so good and holds on to them so tightly, or is it because nobody's kind of coming there looking for their talent to steal?
No, I think the truth is, it's the people that we're talking about are just the people involved in the large language models.
Yeah.
And Amazon doesn't have, look, Amazon.
They're paying some big bucks, too, to keep
No, I know, but I'm saying Amazon, unfortunately for Amazon, they don't have, they were never on the frontier. So right,
so
Apple.
You're saying they don't have anybody that
Apple was never
cares that much about.
For this particular talent, right?
Yeah.
This is like a, you're like a chemist who somehow understands how to weight certain things over other things. And part of it is actually you're stealing the experience that they have of making mistakes earlier And so
That's
you
a good
know
point.
what actually works and what doesn't.
And taking some of their teams with them,
right.
too.
Most of the people who are trying to create large language models are struggling when they're doing it on their own because you have to basically start from scratch. And so that's part of what's happening. So yes, an Amazon, unfortunately for an Amazon, yes, they've done certain types of AI and machine learning, but it's a different, I think it's a totally different business. But who am I to say? I don't know. Meantime, now to one of the effects of all this AI computing and research. Prices from the biggest U.S. power auction jumping above the record high level just seen a year ago. That could put tens of millions of homes from Washington, D.C. to Ohio at risk of a big increase in electricity prices next year. The capacity auction numbers were released by North America's largest power grid operator, PJM Interconnected. Now, big tech's demand for power is butting up against roughly a decade of shrinking power supplies, with PJM and many power projects now stuck in limbo thanks to lawsuits and permitting problems. Some key energy stocks rising in pre-market trading on this news. And you know what's I don't know how much you focused on this. I'm convinced that there are so many governors who are trying to bring data centers to their state. And 5 years from now, they are going to say to themselves, boy, do I wish that we had never done this, because what it effectively does is raise the price of electricity
for your customers.
For your own customers. Because what's happening is...
I should say for your consumers.
For your own
consumers.
residents.
Yeah.
Because what's happening is the data center gets built. The deal that any data center is making with the energy supplier says, by the way, you need to keep us up and running 99.999% of the time, which means the energy goes to me first, meaning energy data center first, before it goes to the customers. And watch, when there's a hurricane or there's some kind of terrible incident, and by the way, the power is working for the data center, but is not working in your home.
Or your hospital.
Or your hospital. You are going to see, I think, wild sort of social unrest, or at least questions about how this is all working. By the way, that's not to even discuss where the water is.
Yeah, well, I was going to say, the New York Times has been writing about the water usage, that it sucks up too. But can you even do that in a heavily regulated industry? I mean, if that's the case and how some of these contracts are written, I wonder if regulators will come back and say,
that's why states like Texas, by the way, it absolutely can work that way. And that's why people are going to certain states where there's more of an interest in allowing that kind of thing to take place. Some of these guys are not even attaching themselves to the grid. I mean, that's the other part of this. So they have their own power supply with literally no connection to the grid. And so when they're on, I mean, their lights will be on and your lights will be off. That's because there's no way to even capture that.
Well, not in Texas, but in most states, the regulators have to sign off on how much you can raise power prices.
Yes, but that's why. Oh, yes, on raising power prices.
Right.
Sure, but what's to say?
If you just run out,
what's to say we don't have power for you because we've made an agreement over here that you get the power exclusively first. That's what the deals are.
That's going to be a pushback.
Cheese will be next.
Coming up, Polymarket, the world's largest prediction market, exploded in popularity during the 2024 presidential election, with billions of dollars of trades on the platform. It is now one step closer to actually legally operating in the U.S., with a $112 million acquisition of QCX.
It's an exchange and a clearinghouse. That lets us go and serve brokerages and FCMs, as well as retail and institutions.
Stay tuned. Squawk Pod will be right back. This is Squawk Pod.
Up and Andrew, Q.
You're watching Squawk Box on CNBC. I'm Andrew Sorkin along with Becky Quick. Joe is off today. CNBC is learning that Goldman Sachs and Bank of New York Mellon have joined forces to create the ability for institutional investors to purchase tokenized money market funds. Now, BNY clients will be able to invest in money market funds whose ownership will be recorded on Goldman's blockchain platform. Some massive money managers, including BlackRock and Fidelity, have already signed up for the project. Goldman and BNY believe that tokenizing the $7.1 trillion money market industry is the next leap forward for digital assets. Tokenized money market funds pay owners a yield, making it more attractive to place for hedge fund, pension funds, and other companies to park their cash. Now, BNY Mellon telling CNBC the tokenizing step is important because it enables seamless and efficient transactions without the friction that happens in traditional markets. We're about to talk to a guy who probably is focused on a little bit of all this tokenizing stuff that's going on. Polymarket returning to the United States, the online betting platform announcing on Monday it's acquiring a derivatives exchange called QCX. Price tag's $112 million. And joining us right now in an exclusive interview about it all is Polymarket founder and CEO Shane Copeland. Good morning to you, sir.
Thank you guys for having me.
So
round two.
You're back here in the U.S. This has been the dream.
Long time coming.
So let's go backwards. You've been operating. We talk about Polymarket as if everybody can use it, but the truth is that most folks couldn't because you had to be in Europe
for trading. I mean, I think the way you guys talk about Polymarket's kind of like become the Bloomberg terminal for reality almost. And it's awesome. I'm humbled that every time I tune in Squawk Box, you're like, well, Polymarket. And, I was watching Eric Adams' episode, and the first thing he said is like, well, the Polymarket for this. And I was just like, I'm from New York. I went to high school right here. And the mayor talking about our site is just incredible. But yeah, I mean, look, there's a ton of latent demand for people who want to participate in the markets, not just look at it. So for us, where we sit, it was like a must-have.
And so what happens now?
So obviously, I think people were pretty surprised. It was like a big acquisition. And the simple way to put it is it's kind of the perfect asset. So it's an exchange and a clearinghouse. And that lets us go and serve brokerages and FCMs, as well as retail and institutions, which is really important. They all know and love Polymarket. When I get to meet these people, they say, oh my God, Polymarket's amazing, but I wish we could trade on Polymarket. And, ask and you shall receive, right? So
how much does this compete like with Kalshi? So that Kalshi is probably your biggest competitor, at least in the United States.
Yeah. I mean, look, it's been this crazy journey where prediction markets, Polymarket has become this cultural phenomenon. And I would say that I'm very grateful and we're very lucky that people have looked at Polymarket's success internationally and said, okay, how can we just copy and emulate this as much as possible in the US? And that was a very arduous journey. And now it's kind of been paved out. So what it makes it for us is like, hey, we can go buy this asset and there's precedent for how to do these things and we're going to be able to get in very quickly.
Do you get know-how with this acquisition too? Kind of understanding of those markets? And
yes. I mean, look, we made a hire, Neil Kumar, our CLO, who's ex-CFTC, ex-Wilkie, excellent domain expert on this. And yeah, the folks at QCX, one of the best parts of it is that they're derivatives, OGs. Yeah. And a lot of the time when we're making strategic decisions, we'll talk to them about it.
I like that. Derivatives OGs, that's good.
It's a different lane, right? I think that Polymarket at its core, it's consumer, it's culture. That's what drives us. But we also are nerds about market structure. And if we really want to go and dominate the market like we can, because you guys talk about Polymarket all the time. We say the Polymarket for this, and it's just caught on. We need to go and be able to serve the markets that. Let
me ask you a question. Long term, if you have the success that you want, I assume there's going to be a lot more competition, and I'm assuming that competition comes from the following places. I'm assuming the sports betting universe decides, you know what, we've got this massive funnel. We've got people who are already betting on sports every single night. They've got their credit card, they got all their accounts there. We're going to get into this business ourselves, right? That's one end of it. There's probably the Wall Street end of it, which is the traders who are going to be doing this in another way. And then I'm assuming there's probably 5 other ways that other people will get into this business. Does that mean that you ultimately license some of what you're doing to other people? Does that mean that you get acquired by one of these people? Does that mean that you buy somebody else? What does this actually look like in success?
It's a great question. I mean, look, you can draw a lot of parallels from how, say, interest rate swaps matured, or say how the stock market matured over the past century plus. The way that I think about it is, you look at sports books, for example, or you look at these like consumer trading apps. They're not exchanges, they're not marketplaces. They're front ends for existing infrastructure. For sports books, it's sort of this commodity business, and you have the odds and you take the other side, and it's basically subject to the innovator's dilemma right now, where they take these huge margins, and now there's a better way to do it with things like Polymarket. The way that I think about it is there's a different type of user behavior that is the itch is scratched for with Polymarket, and that's this idea that you have an opinion on things and you're curious about what's going to happen in the future, and I think you're wrong and I'm right, so I want to put up or shut up, right? And when we think about product, that's what we want to build, as opposed to some sort of hyper-financialized app. And I do think that there'll be maybe some cannibalization if these are powered B2B, or maybe there's some element of, there's probably going to be more competition as the revenues heat up and the market gets larger. But we're really just focused on delivering on product. And the final thing I'd say is, like, if you look at the numbers, I don't know if you guys have seen, like, Polymarket's gotten pretty damn big in terms of usage, distribution, brand. And I think, you look at some of these other companies that have maybe $1 billion marketing budget or near it. And you look at Polymarket, which is just this scrappy team that just is always trying to do things guerrilla and, figuring out shrewd workarounds to go and get distribution. And what's really exciting about Polymarket is because it's not so hyper-financialized, people share the screenshots all the time. People go in, it's word of mouth. Like, I tune in and I hear you guys talking about it. That's incredible for us. And, you guys talk about
what's the craziest bet you've seen so far? I mean, I saw the divorce, the speculation about a divorce between Barack Obama and Michelle Obama. That, like, what's the wildest thing that you've seen on the platform?
Yeah, I mean, some of these Middle East markets where it's like you're kind of anxious about what's going to happen. And from people who are in the open source intelligence community, they go and say, hey, Polymarket's before where we get our leads. Like, it moves quicker. And to me, that's just one of the things that inspired me most before I started Polymarket, was this thing called the Policy Analysis Markets, which was funded by DARPA. And it was all about using decision markets, which is like a deviation or a derivative of prediction markets, to go and forecast what's going to happen in the Middle East. And the idea that we've been able to build up the market infrastructure and the critical mass to be able to have that in real life effectively is just mind-boggling.
Has it worked? The bets in the Middle East situations there have
it's accurate.
Predicted accurately?
When it happens, you see an influx of people in the countries where it's relevant to in customer service queries, right? It's like someone tells me, Polymarket's blowing up in this Telegram chat for this community. Because a lot of people want peace of mind, or they're anxious and they want to know what's going to happen. That's why they tune into the news. That's why they tune into X. And now that there's this other data point, which is the Polymarket for whatever the topic is, they get to see, this is how likely it is. And it's updating in perpetuity. So instead of just reloading a news feed, you can go in there and see what Polymarket's saying day after day.
Shane, let me ask you this. There was a report on CoinDesk that you guys are weighing launching your own stablecoin. Is that true?
I don't know how that stuff gets out. We were really, Polymarket is kind of the killer app of stablecoins because it's this global free market, and it wouldn't be possible without a blockchain and a stablecoin. And we were the first thing built on USDC. All the USDC people are incredible, and it's been awesome to just watch them completely kill it in the public market. And I would just say we started with this older version of USDC, and we now have these longer term markets, and there's a lot more usage, and it's very important that the onboarding is smooth. It's very important that we can have yield.
You capture your
and there's a lot more infrastructure maturation of that space. So we're exploring. Definitely have some calls and meetings lined up to talk to folks about it. But the big thing is we start with user experience and we work backwards.
Different question. It relates to tokenizing, though. And I don't know if anyone's done it to you yet. There's a real effort to try to start selling, to effectively tokenize private companies that are not in the public market yet, but to do it in a way that investors, not just in Europe, by the way, which has different rules, but even in the United States. Do you have a take on what's going on here? The whole idea of tokenizing everything, effectively.
I mean, that's like one of my favorite ideas, right? I'm all about markets on everything. And, no one's tokenized Polymarket stock. And it's been cool that Robinhood has sort of put their foot in the water of doing this because people were very excited. And, companies are going public later, at a later stage than ever, and you want people to have upside early on, and maybe that leads to more liquidity premium, et cetera. I don't know, the downstream effects. Someone else is a professional at that, not me. But I'm super excited and passionate about it, generally speaking.
And then in terms of profitability, so we keep talking, there's a lot of volume on the platform. You're spending a lot of money, though, to build the platform.
Yeah.
What does the line and the curve look like here?
Yeah, not profitable. But, I think when you go and build a platform and you get strong critical mass and you get a strong network effect, that enables you, hopefully, one day when you do monetize, to make more money the first day than you would,
So what is the model or the models that you are contemplating?
Yeah, I mean, look, it's interesting because I've gotten to meet a lot of the top sort of exchange people and talk to them about how they think about their taker-maker fee splits, et cetera. I think that you can expect when you have these retail platforms, you want a taker fee because those people are just less price sensitive. And if they are price sensitive, they can go make a limit order and wait a little longer and provide liquidity to the book. And then, maybe there's some sort of make a rebate, et cetera. I think what's very different about Polymarket is that Polymarket is the source of price origination. Pricing transparency for the majority of these markets starts on Polymarket, right, as opposed to if you're going and trading securities or options, the pricing transparency already exists. So you're trying to eke out margin, whereas we're trying to go and bootstrap liquidity.
Separate question about AI. I'm assuming at some point there's going to be a lot of trading by bots on your platform.
Yeah.
And I've always thought that your platform almost relies on the quote-unquote wisdom of crowds to the degree you believe the crowds can be wise.
Yeah.
And sometimes they are and sometimes they aren't. But I would assume that AI, if it's making these bets, would just be trying to extrapolate and therefore maybe even create distortions in what the wisdom of the crowd actually is.
Yeah, now we're getting to some good questions.
Okay, so what do you think about that?
So, Polymarket is based on like disparity, information disparity, and disparity of opinions. So when one agent or person thinks one thing and someone else disagrees, and both people are confident enough to put their money where their mouth is, and then you have price as the great equalizer. So, the agent or the human may say, oh, I want to buy this, and then the price goes up, and they say, oh, well, actually, this is a bit too high, I'm good. And that's the dance, which is price discovery. And you go on Polymarket, you look at the order book, and you can see it all day, every day. And that's really the business that we're in. And I think what's cool about agents, and what's also cool about Polymarket being built on a blockchain, is that it's globally accessible, and people can hack together, an agent that can go and operate autonomously. And people have done that. It sounds weird like saying buzzwords because that's not really what I do. But there are people actually doing this and making money and running experiments. But what I think is coolest about it, and what's so special about Polymarket, is as we continue to open up market creation, where you can go and easily create a market on anything with less liquidity and less sort of visibility and eyeballs, you'll be able to go and have liquid markets, even if it's very small liquidity, liquid and accurately priced markets for the very long tail, because agents can go and reprice it.
Can I ask one really stupid question?
No such thing as stupid question.
This one maybe. What's the difference between you and Kalshi? What's the differentiator?
Polymarket is Polymarket, and they're a Polymarket copycat.
Let me ask you one final question. The FBI, they raid your place.
Yeah.
This case is now over. Good for you.
Thank you.
What happened that morning, and what's been happening the last couple months? What have you been thinking the whole time?
Yeah. Look, there was so much. I mean, you guys remember pre-election, there was just so much media and misinformation and the full shebang of an opposition rollout against Polymarket. I mean, we'd read that Elon was using it to manipulate the election, and that Peter Thiel had started it to go and manipulate the this is what was being written in real publications. Meanwhile, it's a young guy who started it, who's working his ass off and at his desk, stressed. And so I think that there was a lot of sort of leads or rumors that, frankly, would get people worried, or would say people, hey, we got to look into this. And luckily we were able to dispel all that, and it was baseless. And I think that we ran an excellent ship, and we've only been maturing. And I think when you get all the facts, it's pretty clear.
They just say never mind once they looked into it.
Essentially, yeah. I mean, I think that it closed recently, but that sort of consensus was reached a lot earlier.
Did you freak out that morning?
Yeah.
That's kind of a crazy.
Yeah, I mean. I think you got to make lemonade out of lemons. So that day was very crazy, but it was also an inflection and a milestone.
Shane, want to thank you for coming in this morning. Hope you come on back. It's a fascinating
always
conversation.
A pleasure.
Really, thank you again.
Next on Squawk Pod, the winner of the Mr. Beast reality competition show Beast Games, Jeffrey Allen, on life after his $10 million prize.
I meet strangers. These are children who come up to me. Their first question isn't, how's Mr. Beast, how much money? It's, how's your son?
And President and CEO of Beast Industries, Jeff Hausenbold, he says that's sort of the whole point.
people are lonelier. They have higher degrees of anxiety and depression and loneliness. And we think our Content Now platform and Jimmy's voice could bring people together.
Well, the $5 billion valuation between YouTube and chocolate, that doesn't hurt either. You're listening to Squawk Pod from CNBC. Here's Andrew Ross Sorkin.
Welcome back to Squawk Box. Mr. Beast is the most followed individual on social media. His YouTube channel has the most subscribers. Season 1 of the reality show Beast Games shattering viewership records on Amazon Prime. And the Beast Industries' business empire includes chocolate bars called Feastables. If you have kids or you just like chocolate, you probably know about it. Philanthropy and so much more. Joining us right now at the table is the president and CEO of Beast Industries, Jeff Hausenbold, and Jeffrey Allen, the winner of Season 1 of Beast Games. Good morning to both of you.
Good morning. Good morning.
You didn't bring Feastables with you.
Not today, but I'll ship you some if you need.
I was just in a Walmart and there was a huge display, like massive, and people were just okay. You've been in this gig now, I shouldn't even call it a gig, a job, for the last year. How did this happen, and what are you trying to do to what was a one-person company that's now turned into a massive business empire?
Yeah, it's been a great partnership with Jimmy, a.k.a. Mr. Beast, over the last 15 months. And as you said, he's the most popular person in social media. 855 million unique viewers around the world have watched our content in the last 90 days. And what we're trying to do is take that fandom, right, that connectivity, and that relationship that Jimmy has with his viewers and fans, and do good in the world and build sustainable, profitable businesses. So you mentioned Feastables, our chocolate brand. It's not just better tasting chocolate that's better for you. We're using that platform to change the lives of kids in the cacao farms. There's about 1.5 million kids that are in child labor. So we're in Ghana and Cote d'Ivoire, where most of cacao comes. We're building schools, we're building wells, we're helping the community so kids can have a better outcome through education and their parents can be paid a living wage.
How did you find him, or how did he find you? I asked because, by the way, you've worked at a whole bunch of companies, including SoftBank and others. By the way, you were on this broadcast, I want to say a little over a decade ago, at a very different kind of company.
Yeah. I was running Shutterfly at the time.
Yep.
And touching people's hearts and helping people share life's joy. And what we're doing at Beast Industries is kind of the same thing. We're creating content that's entertaining, but also inspiring and educating. We're trying to make kindness go viral, and we're trying to build sustainable businesses that appeal to Gen Z and Gen Alpha. And I came to Jimmy, one of the board members and investors introduced me 15 months ago, and we just clicked. And we had a shared vision of how to create the next generation of Disney, diversified media and entertainment empire.
Okay, so here we got the winner. Off air, you say, I'll say it on air. He's a handsome man.
He's great.
He's a handsome man. You won this whole thing. 1,000 contestants.
Crazy.
$10 million.
10 million.
What was this whole experience like?
It was an absolute adventure of a lifetime. I'm in my 40s, got silver hair. Like, I don't get to do crazy stuff like this often. But more than winning $10 million, more than having kind of the small kind of modicum of fame, is I have a platform to talk about my son's rare disease. There's only 400 people in the world with his condition, creatine transporter deficiency, and to be able to partner with Jimmy and the Beast team to be able to tell the world about this condition and try to get some emphasis on it is huge.
And just go back for a second. How did you get to be a contestant? How did you think about this? Like, give us take us inside.
My oldest son, Jack, huge Mr. Beast fan. So like a couple years ago, he's like, hey, Dad, I want to start watching these videos with you. I'm like, okay, I'll watch it. I saw him on Rogan. I'm like, so I watched it. And then I saw Beast Games Season 1, apply for it, Beast Games. And I go, gosh, if I can get on this, I can tell Lucas's story, who has the rare disease. Right. And maybe I can go far enough to try to win some money. And lo and behold, I won the grand prize.
Did you think you'd even had a chance to become a contestant, though?
If you look at my application video, no. Like at the time, I'm like, it's like not Mr. Beast, it's not edited well, there's no kind of fanfare to it. But in retrospect, I look at it and go, oh, this is me. This is me with my son talking about kind of our plea. Unfortunately, I got cast and the rest is history. Okay,
so what is happening now? What are you doing now with all of this, the fame and the attention that you can hopefully bring to this disease?
We are investing into research. There's a handful of researchers all over the world who are doing this. Not many, but they're mighty. And so now we are just doubling down. And our ultimate aim is, whether it's small molecules or gene therapy, is to find a treatment for kids like Lucas, but ultimately even for kids who aren't even born yet, because rare diseases and science is a little bit slower than I'm used to, but you have to push the rock uphill.
Beast Games 2 just finished filming?
We just wrapped.
So when are we going to see that?
Later in the year. We're so excited. Beast Games 1 was an incredible hit. #1 unscripted show in Amazon's history, #1 in over 80 countries, over 100 million people watched it. Season 2 is going to be even better. And part of the success of season 1 was contestants like Jeff. Like, we have 1,000 people. I couldn't better script out of central casting a winner than Jeffrey, right? He was engaging, he was a team player, he was strategic, he had luck and charisma, and then he's using his winnings for something that's good, and it's just amplifying what we're all about.
Big media question for you. How much, when you think about the Beast Empire long term, how much of it is going to be on places like Amazon, which I wouldn't call traditional, but are more traditional than necessarily YouTube or TikTok or other forms of social media? What does that sort of look like over time, as I think the rest of us are all trying to figure it out?
Yeah, you watch your show every morning, and two key themes keep coming about: the rise of AI and the creator-influencer economy. And we're sitting at the intersection of both of those. And so we're going to continue to be on the forefront of the evolution of the entertainment industry. But we're so fortunate to have great partners like Google and Amazon that are incredible technology platforms that reach billions of people around the world. We're going to continue to create content on YouTube, on Amazon, on other platforms that is short form, long form, unscripted and scripted. We just want to reach as many people around the world as possible.
So, but it's about everybody. You're not going to be picking one or the other. You think you can't be exclusive in this new realm?
I think it doesn't make sense from a business standpoint, because each one of those platforms have a different strength and a different audience base. So we're going to create content for those audiences and be able to continue to be ubiquitous.
Look, you guys are so well known, and so many people want to invest in you. Do you need the money? It feels to me like you guys bring in so much. Would you ever go public? Would you ever take on additional investors?
Yeah, we never say never.
Yeah.
Part of the benefit of being public, it gives us a bigger platform to talk to our fans and the retail investors, and to be able to give them an opportunity to enjoy this incredible ride from a financial standpoint. Jimmy's about democratization, right? About reaching the common person around the world. 70% of our viewers are outside of North America. And so if we can help our fans be part of that journey in a way that also helps them financially, that's kind of an interesting angle.
That's intriguing.
Yeah.
That's intriguing. I had not thought about it from that perspective.
How much do you think that the whole franchise and his brand, it goes to what you've done and winning as well, has this sort of philanthropic piece to it? Because he's supported so many other philanthropic efforts as part of everything that he seems to do. And how much of that is sort of embedded in the company? What does that actually look like for the investors, to the degree that you end up doing things that might not always be economic?
Yeah. Philanthropy is the heart and soul of everything we do. We're trying to take views and make kindness go viral. We want to be able to help people give back, because, as you know, gratitude and giving is the essence of life happiness. And so it could be something small like picking up trash in your neighborhood to solving a rare disease. So we want to use this platform to amplify in a fractured world, is that it's about kindness and connectivity and community. And we think it's actually great for the shareholders because it resonates with our targeted demographic of Gen Z, Gen Alpha, and it differentiates us from all the rest of the entertainment players.
And I'd say the one thing I would add is the biggest takeaway for me. Obviously, I won 10 million, I got a little bit of fame, but I meet strangers. These are children who come up to me. Their first question isn't, how's Mr. Beast, how much money? It's, how's your son? Have you found a treatment? And that's the most moving thing and most inspirational thing for me is Beast Games showed me a different side of humanity, gave me a ton of hope for humanity, and I'm super excited to see what you guys do in the future.
Can I ask you one final question? And this goes to social media. So we all talk about doom scrolling, and you sit there and you watch all the stuff that is, by the way, is not always about kindness. In fact, the stuff that seems to often go viral, maybe not as viral as Mr. Beast, maybe this speaks to all of this, isn't always about the stuff that you want kids to learn about. And the question is, do you think that there's a moment or a way that we're going to somehow change all all of the way this works longer term? We've been in, like, is this a transition period? I'm hoping it transitions to something that looks a little bit more like what you guys are doing rather than where we are.
It's partly why I joined Jimmy on this journey, is his content brings people together. Part of our success for Amazon Prime Video was what we're called a 4-quadrant show. We bring people together over 25, under 25, men and women. We don't do politics. We don't do American-centric humor. We're universal in our appeal. And we live in this more connected society than ever before. People are lonelier. They have higher degrees of anxiety and depression and loneliness. And we think our content and our platform and Jimmy's voice could bring people together.
Okay. Jeff and Jeffrey, thank you very, very much for coming in.
Thanks for having us.
Thank you.
Appreciate it. Congratulations.
Great. Thanks so much.
And it's an important cause. We'll keep our eyes on all of it. Thank you.
And that is the pod for today. Thank you for tuning in. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. And to get the best of our TV show right into your ears, please follow Squawk Pod wherever you like to get your podcasts. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.